Well, good morning, everyone, and welcome to my daily video. I wanted to tell you what's on the table today, and that's the jobless claim. I've been waiting all week to see what the jobless claim will tell us, and the number actually came out surprisingly low. We're below the consensus. The consensus was 216,000. We came out at 209,000. The 4-week average is right around 214,000, so we're below. The actual number is below the average, the 4-week average, and below the consensus. That's a positive number. Now, that's important. Let me tell you why. Yesterday, the FOMC minutes came out. That's when the Fed tells us what they were thinking. And it was very interesting because the Fed was squarely divided, okay? Half the Fed wanted to lower rates even more than they did. They wanted to lower it half a basis points, while the other part of the Fed said, no, we shouldn't lower them at all. Rates are good right now. Economy's doing well. This is just a blip. And that kind of goes along with what we're seeing right now, that economy is really strong and maybe Fed should have held off lowering rates. But again, quarter of a basis point, not a big deal. So let's see how the market's reacting right now. The market's higher. The S&P futures are higher by a very little after this announcement. Again, this number isn't anything massive, and yesterday's FOMC data was a lot more important than the weekly claim because that tells us what the Fed is thinking. With that said, we're getting very close to the 50-day moving average. Unless we see a catalyst, a major catalyst, something strong like more negotiations with China, more deals coming together, something new and different, earnings that are just totally off expectations next quarter. What I'm trying to get to is right now for the next week or two, or maybe even longer, I'm not seeing a major catalyst. And that tells me that we're going to hang around between the 50-day and the 200-day moving average. If you want to go long, please wait for 2 days above, completely above the 50-day moving average. I've said that before. Now, let's quickly take a look here at tomorrow. Tomorrow we have Jerome Powell speaking. That'll be very important. And new home sales. Both important reports will give us another idea or another hint at the sentiment that we're dealing with. But right now, the market's between the 50-day and the 200-day moving average. And be careful. Don't get too trigger happy to go long till we're above the 50-day moving average for 2 days. Now, put to call ratio is very interesting. It's showing us that the market actually is ready to go higher. It's stretched out to the bear side, which is kind of odd considering we've been going long the last few days. So be very careful and be very cautious and expect some choppiness and congestion. Don't expect a parabolic move up. I don't think that's in the cards unless we see something really drastic like Trump tweeting that China and US have worked out tariffs, which I doubt will happen. All right, I'll talk to you guys later and have a great day.